The meltdown has begun, markets in freefall as Trump escalates trade war. Alright guys, buckle up because the meltdown is officially here. Just a week ago, we warned everyone to brace for impact and now it's happening. The US stock market is in turmoil with the S&P plunging into correction territory, down over 10% today alone, and guess what? It's probably going to get even worse. Trump is going full throttle on his trade war and he just delivered a massive shock to the world economy. We saw this coming, we talked about it repeatedly, but now it's real. His reciprocal tariffs won't just hit China, Canada, or Mexico, they're targeting everyone. No industry is safe, not steel, not semiconductors, not pharmaceuticals, everything is in the crosshairs. And the pain? It could start as early as tomorrow. The global economy is on fire and supply chains everywhere are about to be shattered. Gold prices are screaming panic mode, breaking past $3,100 an ounce. Why? Because when tariffs rise across the world, there's nowhere left to hide. Stock prices are driven by corporate earnings, and if global trade slows down, revenue collapses. At the same time, consumers are already struggling. This is a recipe for stagflation. On one side, growth grinds to a halt. On the other, prices skyrocket due to trade barriers. And while deflation could follow, it wouldn't be because of increased supply. It would be because the world plunges into a deep recession where nobody can afford anything. There was hope, faint hope, that Trump might limit the scope of these tariffs, maybe focus on the biggest offenders. But nope, he's hitting every country. This means massive trade barriers on exports into the US, regardless of whether a country has a trade surplus or deficit with America. Trump's goal? Force the world to tear down tariffs on US goods, and he's doing it in the most aggressive way possible. With America's trade deficit so massive, he's going for shock therapy, hitting the entire world at once. Trump's strategy follows: hammer everyone first, weaken them, and then impose his demands. But let's look at who's most at risk. Countries like Brazil, Russia, the EU, India, and almost all of Asia are in deep trouble. Emerging markets that depend on exports to the US are especially vulnerable. And since the global economy still runs on the dollar, a massive currency crisis could be looming. Countries like South Korea, India, Vietnam, and Brazil, who have high tariffs of their own, are now prime targets for Trump's retaliation. His justification? He wants to ramp up US production across multiple sectors, but American consumers alone can't absorb all the goods. That means he needs global buyers. His solution? Strong-arm other countries into better trade terms to shrink the trade deficit. And guess who's most exposed? Countries with a big trade surplus with the US. Think Taiwan, Germany, Ireland, Vietnam, South Korea, and India. They could see even tariffs. But let's be real, this isn't a power move, it's a move. The world economy is teetering on the edge and Trump is trying to force a course correction before it crashes into the iceberg. Ironically, the US itself might be the biggest casualty of all. The IMF estimates the world economy could lose 0.6% GDP through 2026, with the US seeing the steepest decline, over 1%. Investors are panicking because under a trade war, America grow like it used to. Retaliation is inevitable and countries will stop buying US goods. That's why the stock market is nosediving. Investors are desperately trying to reprice equities in light of this disaster. Trump's tariffs will raise the average US tariff rate by 15 percentage points in 2025, 3 times higher than projections at the start of the year. For consumers, that means prices on everything in American stores will surge by 18% or more. Higher inflation, shrinking wealth, and growing recession fears, this is a double hit to the economy. Goldman Sachs now pegs the US recession risk at 35%, while JP Morgan has it at 40%, and rising. And if you're wondering the markets are crashing, this is it. Investors are scrambling to adjust as the trade war spins out of control. Trump's campaign promise of a 60% tariff on China and a 10% universal tariff is looking more real by the day, and markets still fully priced in the potential for things to get even worse. If he slaps tariffs on more countries and more industries, global markets could face an even shock. Trump's endgame? Reindustrialize America at cost. Whether that strategy works is up for debate, but to pull it off quickly, his only tool is a global tariff war designed to exporters into submission. And it looks like he's winning. Companies are already pouring billions into US manufacturing to dodge tariffs. $100 billion from TSMC, $500 billion from Apple, and $20 billion from French shipping giant CMA-CGM. Even Honda, Nissan, and Hyundai are shifting production to the US. But here's the problem. Who's going to buy all these expensive goods? American consumers are already struggling. Can they afford pricier iPhones and cars? Or will they simply stop buying? US stocks are already grossly overvalued and now they're crashing. The S&P 500 has plummeted over 10% in the first quarter, its worst quarter since 1988. Let that sink in. This drop is worse than the 2008 mortgage crisis and the 2020 pandemic crash. And history tells us, after big crashes like this, markets usually keep falling for at least another 3 months. If that pattern repeats, things could get much uglier. There are only 3 major support levels left for the S&P, at 5,400, 5,200, and 5,000. If we break those, the sell-off could spiral into an all-out capitulation event, leading to another 10% or more in losses. This isn't just about numbers on a screen, it's about real economic consequences. American households are heavily invested in stocks, holding 170% of their disposable income in equities. If the market keeps crashing, people will feel poorer and cut back spending. That could trigger an even deeper economic slowdown. Right now, consumer spending is propped up by the richest 10%, but those are the people most exposed to the stock market. As their wealth evaporates, the entire economy will feel the hit. It used to be that the economy dictated stock prices. Now, in this bizarre new reality, stock prices seem to be dictating the economy. And if you think Trump will rush in to save the day, think again. According to White House economic advisor Scott Bessent, they don't care about the stock market right now. Their focus is the real economy, which means they're willing to let the markets bleed. So guys, fasten your seatbelts. We are already in the danger zone. This trade war could reach ballistic levels at any moment. But what do you think? How much further will markets collapse? Will Trump go all in on his tariff war? Let me know in the comments below. Stay safe, smash that like button, and subscribe as we navigate through these crazy times.